Guys, today we're going to be talking to you about predecessor and successor communications throughout the engagement process. As we know, accepting a client can be particularly stressful for a company, especially if they're moving from a competitor auditing firm. The communications between the predecessor and successor are designed to help the client evaluation process for an auditing firm. So let's imagine that you just started to bring in a new audit client into your firm and you're super excited about it. For some reason or another, the client has decided to leave their previous firm for you, and the past auditor is clearly heartbroken by it. But since you're taking on the client, you need to talk to the past auditor to make sure you're ready to bring on this client. The PCAOB Audit Standard 315, in case you want to do more research on it, because tests. This standard outlines the communication between the auditors during the engagement period. It's very, very comprehensive. The standard also advises that the successor auditor should communicate with the predecessor auditor before accepting the client. And it's recommended that they make the contract contingent upon later communication if they go ahead and bring in a client before they have this communication. As we all know, there's a large emphasis on confidentiality in accounting, so a successor auditor must get a confirmation from the client in order to access the information from the predecessor. Even if the successor auditor doesn't take on this client, they must hold this information in confidence. And here are all the stacks of paper that you're more than likely going to receive from your predecessor, and they're probably going to be unorganized, and you're probably going to have an intern organize them all for you.
Once you've gotten permission from the client, you should make specific and reasonable inquiries of the predecessor auditor. These can include information regarding integrity of the client's management. We don't want to be working for shady people. Michael Scott is one person that comes to mind. Disagreements with management over accounting principles, such as depreciation method that they use. Communications with audit committees or others about fraud or illegal activity, such as pending lawsuits. Predecessor auditors' understanding for the change in auditing firm, basically asking them the question, why did you leave? And predecessor auditors' knowledge of the client's relationship with related parties and unusual transactions. As a successor, you should not be redoing the work of the past auditor, but you need to have a firm understanding of the work they did. Typically, the past auditor will allow the successor to review additional information, such as working papers, documentation of planning, internal control analysis, and other matters of concern. While these items are not required, it is strongly encouraged by the PCAOB in order to supplement the aforementioned evidence. You should also ask to meet with the predecessor in person in order to discuss any questions you may have for them.
So how is all this information used in the current year audit? Here's all the evidence that Josh mentioned which you have gathered about the client. As a successor, you need to find credible evidence in order to form an opinion at the end of the audit. Just like every other audit, the evidence must be sufficient and appropriate. It also should be able to vouch for the completeness and consistency of the accounting processes, and it should be well documented. You will need to use the information gathered from the client's previous financials and work as it relates to the prior year. The previous work is solely used as a starting point for understanding the current year audit. Nature and timing of the current audit is affected by your depth of understanding in the prior year. Ultimately, you, the successor, are responsible for the audit opinion of the current year. The work at the previous audit should not be used as a basis for the final opinion. In the end, this is an important step in the engagement process. As we all know, the accounting industry is very competitive, so it is tempting to hold a grudge against the client that is leaving you. But we are held to an ethical standard as accountants to help and protect our clients. So is that it?
Yeah, we're done.
Okay, that's a wrap.
Woo!